Hi everyone. In this video, we're going to look at the Ultimate ADX DMI indicator, which is a premium indicator on the TradingView platform for sale by Kick Studios. We'll be covering many generalized topics as well related to ADX and DMI trading scenarios, so I think everyone can get something out of it, but I just want to be upfront and let you know that the focus will be on this specific implementation, which is an invite only, and that is to say for sale indicator that you can purchase on kickstudios.com. Another thing that, while I'll talk about the most common ways people trade with this indicator, you should treat these as guidelines or starting points, because everyone has different trading styles, time frames, risk management strategies, etc. And thus the ways that you can use this indicator, especially as a secondary trend confirmation tool, can be quite varied. Okay, so let's dig in. To add this indicator, first of all, I'm going to come up here to my add indicators. And if you've requested a trial or if you've actually purchased this indicator at this point, they will appear, it'll appear here in your invited only script section. Another way that you can access it, which is one that I recommend, is if you were to go to the actual page for this indicator. Okay, right down here, you can click add to favorites. And once you do that, they will show up here in your favorite scripts as well. Okay, so I'm going to go ahead and add it in right now. And the chart I'm looking at right now just is a Bitcoin chart with, looks like we're on 4 hour. Okay, so we have the indicator that's down here at the bottom. I'm going to make it a little bigger just so that in this video you can see it. But the main thing that I focused on when we created this particular indicator is we wanted to actually show the most information possible in the smallest amount of space. Okay, so, and I'll show you later how you can turn on and off some of the different parts of this indicator. Okay, but the very core piece of this indicator is this bar chart that's right here in the center. And what this actually is showing and measuring is the ADX. So a lot of times in other indicators, this is shown as a line graph. Here we have it as a bar graph. But you see here, its values go from, usually around 10 up to around 50-ish. It's typical for most instruments. But what it indicates is the strength of the current trend. Okay, so the higher it goes, the higher the numbers, like right up here, the stronger the current trend is in either up or down. And as it gets down towards the bottom, like towards, under 20 or so, that indicates a weak trend or possibly a non-existent trend if you're under 10. Okay, so that's what this line is here. Now, you also see that we have 3 very faintly drawn gray lines in here. By default, these lines are at 10. Which, as I said, anything that's below 10 is considered really not trending at all, just choppiness. Of course, I'm looking at Bitcoin here, so while it does chop, it is also very volatile, so you usually have a trend going one way or the other. As far as coloring of the bars, if we were to be able to find, which I don't think we will with Bitcoin, any time that the ADX fell below 10, they would the bars would appear in gray. Okay, so once you go above 10, and if you're between 10 and 20, 20 is what we've decided is the trending floor. So anything that's between 10 and 20 will appear with much faded out colored bars. So here you can see this red is not nearly as vibrant as the other reds that you see here. It's almost like a salmon color. Same with the greens, kind of faded, more of a mint type color. So anything that's under 20 is considered to be forming a trend. However, we would consider that to be a nascent trend or something that's not quite formed and gaining any momentum as of yet. And as you see, like in this section from about here to here, where we were there, we do have just kind of a little bit of choppiness where there's not a lot of trending going on. Which, I mean, we're looking at Bitcoin, so there were some wicks that spiked up and down, of course, but we don't have any strong trending moves. Now, once we get above 20, which by the way, we're using 20 as the trend floor. A lot of other references will tell you that 25 is kind of the baseline for that trend floor. And that's something that is actually configurable. I'll show you where we can set that when we look at the settings. The last line we have up here is at 40, which is also, again, configurable, but that's where we start looking for trend exhaustion. So as the trend gets above that, that trend is probably getting into the range where it becomes exhausted. And all that exhausted means is that that's where people that had, like in an uptrend, had bought anywhere in that will look to start taking profits. And so, of course, when they go to take profits, the trend will reverse. So that's the point where you look for a retracement or a pullback or whatever terminology you want to use for that. Now, just start quickly talking about this exhaustion zone. One of the things that I find often when you look on, say, Investopedia or other tools like that as to how to use the ADI or ADX, they say that once you get into the exhaustion zone, then that's where you should exit your trade. I pretty much strongly disagree with that, because I have found that in a lot of the instruments that I trade, the strongest part of the trend happens above 40. So like this is not a great example, because in this case we trended quite heavily right up to this point. But as you see, even from here to the actual top was almost the same distance as it was from the bottom, about 7.5%. So if you were to actually get out right here where it crossed the 40 line, you would miss out quite a bit on this trending move. Now, it is true that if you look at this is definitely much more, I mean, it's not quite parabolic, but it's pretty straight up. And after we get to this point and it goes above 40, it does get a little bit choppier before it actually reaches that top. But the way that I usually use this is I look for this asterisk that marks the peak of this. Now, of course, anytime that you're looking for a peak in anything, in this case, we're looking for the peak of the ADX, we can't actually paint that until we confirm that that is indeed like a peak. So these asterisks that appear in this indicator's ADX chart, they'll appear 2 bars late. Okay, so there is repainting that goes on, but only with these asterisks. And like for instance, this one wouldn't have appeared until 2 bars later. So right here. So we wouldn't have caught this top. We would have gotten out like right here. And as you see, it did continue going up a little bit more. But then we started trending down, and actually most of us actually thought that this was going to continue going down. And then we had just today some, or I guess in the last day and a half, some additional new money entry and bulls entering to kind of drive this back up. So that's the ADX portion of this. Now, let me talk about DMI, or the Directional Movement Index. So these lines that you see up here, the blue and the yellow, the blue is the DI plus and the yellow is the DI minus. And simply the way that we look at this is whichever one is on top indicates the direction of the trend. So when we're looking at just the ADX value, it only tells you the strength of the trend, but it doesn't give you an idea of the direction of the trend. So that's what the DMI is for, to give you that direction. So you notice like right here, as this yellow line crossed above, we started a downtrend, basically from here down to here. Okay, and actually per the DMI, it recrossed about right here. So not quite right at the bottom, but pretty close to that bottom. And then we had an uptrend until we got to about right here. Okay, and that's where it started going back down. So again, back to the way that you traditionally trade ADX and DMI. A lot of the resources that you find out on the web will say, do your entry when the DMI lines cross, and then get out when the ADX hits the exhaustion zone. Okay, so I've already talked about the last. I would stay in a little bit longer. Probably don't stay in all the way till the DI lines cross again, because there is often a lot of pullback before that actually happens. Like, so for instance here we had the lines cross and we had the great push up, and then we consolidated, and that whole time that we consolidated, the DI line was still, DI plus was on top, and it's not until all the way here, so about right there, that they crossed again. And so you pretty much, if you got, let's assume that you got in right here, you know, this whole move would have been 16.3%, but if you waited all the way until they crossed again to get out, you gave up, you know, about 7% of that and only made 9%. Okay, so that's the DI lines. Now, the absolute values of these are not actually what you see over here, because there is a setting that, again, this is for visual purposes, is offsetting this by 70 by default. So if you wanted to see the actual values, you can change this to 0. And you notice it moves these lines down into the same range as we have the ADX. Now, I bring this up because there are some strategies out there that for entries and exits actually say that the ADX value should be above whatever the lower DI value is. So let me give an example here. So like, let's look right in this area right here. It would say don't enter here, wait until you get to right here, because now the ADX value has popped up above whatever the lower DI value is. Honestly, I have never seen why that's a good rule to follow. It works out just as often as it doesn't work out. So, but if you're going to follow that type of strategy, then you would want to have the these lines down here with 0 offset. Okay, but of course I prefer them up and out of the way. And if you want them completely out of the way, you could set this to 100% and they'll never overlap then. But as you see, it's really rare for the ADX to get above 50 or even 60 with most instruments. So I think that you know, the default that we have set of 70 is a good place, and you'll get it. They will overlap sometimes at some points, you know, on some. And of course, if I make this area smaller, it might be more apt to do that. Or if you're on a different time frame. Okay, and of course, now that I'm looking for a specific example of that, I mean, this gets really close right here. It did kind of overlap the asterisk, but didn't overlap that. But anyway, you can play with that. Some people don't even want to see the DIs because if you look down at our ADX chart, our color coding gives you, will tell you which of the DI lines is on top and bottom. So if they're red, then that means the yellow DI line is on top. And if they're green, some shade of green, then that means the blue line is on top. And so again, if you're looking for showing the most information in the most compact way, you can come over here to style and just turn these DI lines off. Okay, because you are actually getting the information as far as is the trend up or down based on the color of the ADX bar chart. Now, what you don't see as easily, and this is why I do like having the DI lines on, is you can kind of see when they're converging or separating and how far apart they are. So just because this shows me that it's green up here, it doesn't tell me really how far apart the DI lines are. Okay, which is of course one of the reasons why you might want to look at that. Okay, so since I went ahead and did bring up the settings, let's talk about some other settings that we have here. You notice that by default we have the DI length set to 10 and ADX smoothing set to 8. Now these are a bit lower than the standard is for this indicator in other implementations, and we've done that because I've kind of find just that through my own usage that this gives you a bit more responsive, usually by 1 or 2 bars better indication of this. So like for example, I'm going to add the built-in one in here. Okay, so the built-in for this is called directional movement. They used to have one called average directional index or something like that, which was just the ADX part of it. But everyone always added the DI part to it as well, so they finally decided here recently to just add them together into this DMI. So in this case, the red line is the equivalent, is the ADX line. And if you can kind of follow its contour, you can see it's very similar to what we've drawn up here in our indicator. And then the blue and the orange are the same as our DI lines. Okay, but if you look at their settings, by default, they're 1414 for smoothing and DI length. Okay, so if you want to be a little bit more traditional, you can change those values here to 14 and 14. Okay, but I somewhat prefer 10 and 8. Here's where you can set that exhaustion zone. Now, the only thing with setting this exhaustion zone to something other than 40 is it's important to note that with our indicator here, it will only consider looking for that exhaustion peak if you're in the exhaustion zone. So, like, notice, let's see, how high are we there? If I change this to something like 60, okay, you notice it moved that line up and changed the colors here now. So now this is just considered strong trend zone. And because it's not in the exhaustion zone, it doesn't print that peak that we have up at the top. Okay, so some people really like using 50 instead. So here we would get this one, but notice we don't get this one over here like we did with 40. Okay, so if I drop it to 40, now we get that peak. So that's the only main thing to kind of be aware of if you go and change the exhaustion zone. But if you're using a strategy where your part of your strategy is you get out at 50, you might want to set this line to 50. Same with the ADX trending floor. A lot of other places use a more conservative value for this of 25. But there are just as many places out there that do use 20. And that is what we use as the default for our value here as well. And so remember, that changes where we consider something to be like in a strong trend zone versus a trend forming area where the colors change. And for this one, really that's the only difference, is it'll mark where the colors actually change. Okay, I've already talked about this one, and I'll get to the multi-time frame items here in a moment. Do want to point out that all of this can be turned on and off. So again, like these lines here, because they're not really necessary visually, since we do have the ADX change colors, once you go above 40, we don't need that exhaustion zone line. You don't need the trend floor line, because that also is a point where the colors change from vibrant to desaturated red and greens. And the same with the 10 line, because if it goes below the 10, it will change to gray, this color right here. So we can even remove that just to even be cleaner in our indicator. Okay, we'll leave it just like that. All right, so I'm going to get rid of this now. And as you can kind of see with that, that's one of the reasons that we decided to create this indicator, was that using the built-in one was very difficult visually to quickly identify what's going on in the trend, which is what we hope to have accomplished with this. Now, the last thing I want to talk about are these boxes that are below the indicator. And there are 3 sets here, which are basically your multi-time frame trend indicators. So they are going to use the same things that we use for the current timeline or current time frame up above, except they're going to do it in a more compact way. And of course, the information that they're going to deliver to you is far less, because they're delivering it all in a single dot. And those dots can basically be 5 different colors. They can either be gray, like you see right here, and that indicates that there's that the data says there's no trend, at least no trend that you can count on. Okay, so non-directional. It's not really, it doesn't mean the same thing as when the ADX indicator actually goes below 10. But it means that for that time frame, in that little spot, there's not enough information that would indicate a trend up or down. Okay, and then if it could be dark red or dark green, and that just basically means it's a weak trend in that direction, either down or up. So even though it's the same color as we have that's used for the exhaustion zone, it is actually a little bit different because it's meaning that the trend is weak. Now, that can mean that it's either way up in the exhaustion zone, or it could mean that it's way down in the trending floor zone. Or we actually use one other measurement down here that utilizes price action to determine whether a trend is strengthening or weakening. So for instance, like right here, even though we are in a downtrend, as the ADX is starting to tick down, you can see that the price is actually going up here still. So depending on the magnitude of that, you could actually start seeing the darker colors show up, indicating that it is a weakened version of that trend. And then finally, if you see bright red or bright green, that's a strong trend. Okay, we could be in this zone, we could be in the exhaustion zone, but in most cases, it does indicate that the ADX, the trend strength, is actually on the rise as well. So from that, you can actually set, for all three of them, other time frames that you want to monitor. Okay, so notice here we're looking at a 15-minute chart, and I have this also set to look at 60-minute, 4-hour, and a daily chart. So what you type in here, if it is anything less than a day, then you should do it in minutes. Okay, so from anything from 1 for 1 minute. Oops. Okay, so anything from 1 minute up to 1440, which is an entire day. Okay, so for instance, 240 would be 4 hours. And then once you get above 1440, so 1 day, then you start using this syntax. So D would be 1 day, 2D would be 2 day, and so on, 3 day. If you get up to a week, then that's W for week, or if you want 2 weeks, it's 2W. And then you can also look at monthly. Okay, so like a good example here, let's switch over to an actual stock. And we'll go ahead and look at Microsoft. Okay, so if I'm doing a little bit longer term analysis here, so I'm going to switch my time frame to, let's see, I'm going to do 195 minutes. So why 195? That's half of a trading day, right? Because there's 6.5 hours in a trading day. So by the way, you shouldn't ever, the reason that I have some kind of odd times in here, like 65 minutes, 130 minutes, 195 minutes, is because when you're using a stock that is a non-24/7 traded, where there is a time frame where the market is closed, you don't really want to use something like, for instance, 60 minutes, right? Because then it will divide your day into, like, there'll be 7 candles, and the first of those candles will only be a half hour long. So if you're using any indicators that like treat every candle as equal value, which most indicators do, you'll get skewed results. So instead, if you use something like 65 minutes, then that divides the day into 6 equal parts. 130 divides it into 3 equal parts, and 195 divides it into 2 equal parts. Okay, so I'm going to use 195 minutes here, and then set these to be 1 day, a week, and a month. Okay, so as you notice here for Microsoft, on the daily, we've been in a pretty strong trend, you know, from around this point. I mean, we did have a little bit of pullback right here. And you might say, oh, that's like nothing compared to that. And you would be correct from a relative perspective, but this, I guess that wasn't much of a pullback, was it? Oh, wait, let me turn this magnet off. I mean, it was a 4% pullback, which, you know, for a stock like Microsoft, that's pretty significant. Of course, this one was even bigger. From there to here was almost 5%. And so we did get that noted right here in the ADX. But as you look at the longer term, so the top part of our chart here gives us, in this case, the half day, but then our daily gives us another picture. And as you see that, even though from a half daily perspective, this area right here is considered a pullback, but if you looked at the weekly, it was strong green all the way through here. And same with the monthly, which of course has been green for quite a while. Because, you know, if you entered down here, you would probably want to go ahead and stay in this, going all the way up. Now, if you look through this section, which was highly choppy, you notice that on the daily and even the weekly at points, it turns gray, because through this chop, there's no trend like really to be had, except on the monthly. The monthly still indicates that we're on an upswing, and yes, indeed, this has been going up and up and up for quite a long time. Okay, so the last thing I want to mention about these multi-time frame points down here is there are a few users, myself included, that actually like using this indicator only using those components. So I have a lot of trading strategies where I use other indicators to sort of mark my entries and exits. However, I often want to confirm that the higher time frame is trending in the direction that I want. Okay, so couple things here. One of the things you can do here is in the settings. Let's say you only needed one of them, you can change others to 0. So in this case, I'll turn those off, and notice now I only get one bar down here, the daily bar, which gives me my trend. And if I wanted to, I could just turn this ADX completely off and go ahead and turn this trend exhaustion peak off too. So basically, you're turning everything off except these items down here. So the first, I don't know, 5, 6, 7 items there. So now we get this, and I can actually pull this all the way down so it doesn't take up that much room. And I could be using other indicators up here to kind of really derive my true entries and exits. And notice that as I change time frames, it doesn't really change the fact what's down here. I mean, of course it will change because now it's spread out over more candles, but what's not changing is the fact that this is showing me data from the daily, because that's what I set it to. Okay, and if we wanted to have more than just the daily, again, we could just change these back. Okay, so if I wanted to see all three again, we had all three of those lines in here, and in a very compact indicator here, I can see what's going on in 3 other time frames than the one I'm looking at, so that I can confirm my macro biases, or not even macro. I mean, obviously monthly in this case, what I would consider macro, but you know, macro, intermediate, short-term time frames, anything to help judge where the trend is on higher time frames. Okay, so I hope that did a good job of both telling you about how to utilize the ADX DMI indicator to kind of judge the direction and strength of trending markets, and as well as give you the specifics about this particular Ultimate ADX DMI indicator from Kick Studios, in case you want to utilize that. And by the way, if you do, or if you are interested in that, you can go to kickstudios.com/shop. This is the address that I will give you, to take a look at this and all of our other indicators, including there are some that are free out here. So here's this ADX DMI indicator, and if you from here click on this request trial button, you're able to request a 3-day trial of this and use it yourself and play around with it, see if it works with your trading style and your trading strategies. And then when you're ready to purchase, you can just add it to your cart. This video itself, you might have actually gotten to it from right there. As you see, it still says coming soon because I'm recording it as we speak. But if you found this, via YouTube or some other route, then you can actually get back to this tutorial video pretty quickly right there as well. All right, so with that, the last thing I will mention too is if you're not really interested in any of these custom indicators at all, but you are interested in other TradingView custom services, we do offer what we call retail trade ops programming. So it's kind of the development aspect that's geared towards retail traders specifically. So there's something here we might be able to help you with. as well as we offer a course at the moment, and here's where you can come to get a pretty big discount coupon. Yeah, it's 80% off right now. We'll probably, looks like this one's expiring pretty soon, but we'll probably add another one. So come here and take a look. And if you want to learn how to develop your own custom Pine script indicators, this is the course for you. So with that, I'm going to sign off and say thank you very much for watching this, and good luck to you in your trading endeavors. Thank you.